everybody, so welcome to lesson 19, adjusting entries on deferred revenue. Okay, so before anything else, please download Handout 019, adjustments on deferred revenue. So we will be using this handout for today's discussion. Okay, so unearned revenues or deferred revenues are those payments that are being received by the company in advance. However, the revenue event or the rendering of service is not yet being given by the company. So basically, hindi pa talaga yun na-earn ng company, naka-receive pa lang sila ng advance payment. So at the end of the period, we need to adjust the amount of revenue that was already earned by the company based on the service that they have already given. Okay, so the same thing will happen. We will be discussing two methods for today. Okay, so let me read to you the problem, and the problem is also available here in our board and in your handouts. Okay, Lipana Tax Consultancy received 150,000 representing advance payment for 6 months tax compliance and consultancy services from one of their clients on November 1, 2020. The accounting period of the entity ends on December 31, 2020. So as we analyze the problem, so it is a tax consultancy firm, so their services is providing tax compliance services and tax consultancy to their clients. Okay, so they received in advance 150,000, which covers services for 6 months. It was received by the company on November 1, and then the company will prepare financial reports or financial statements by December 31. So by that time, kung November 1 na-receive yung payment, and then December 31 yung financial statements, 2 months na yung na-earn talaga ng company na revenue, or they have already really rendered service for 2 months. So we need to adjust it for 2 months. Okay, so I think we're ready with preparing the journal entries for today's discussion. Okay, so let's prepare the initial and adjusting entries needed in this problem. Okay, so on November 1, the company has received 150,000, and since this is an advance payment, so we will be debiting the cash account for the amount of 150,000. And then we credit a liability account, which is an unearned revenue account. But since we need to specify what kind of unearned revenue this is, so we will be using the account unearned tax consultancy fees. Credit. So our initial entry on November 1 will involve the 150,000 that was received by the company in cash, and then we will credit unearned tax consultancy fees, which is a liability account, for the same amount of 150,000. So this will be our analysis. Okay, so if the company has received it on November 1 and the financial statements of the company will be prepared on December 31, 2 months of service has been already rendered by the company, so they need to recognize revenue for 2 months already. Okay, so with that given, if 150,000 represents 6 months, this will be your analysis. 150,000 of unearned revenue, then you multiply it by the 2 months that was already earned divided by 6 months total coverage. So 150,000 times 2 divided by 6 will give you 50,000. Alternatively, you can do this. 150,000 divided by 6 is 25,000 per month. And then 25,000, how many months did we already really earn? Diba 2 months? So times 2, it will also give you. Okay, so use the analysis where you find it more comfortable. Okay, so we need to adjust this 50,000 amount into the revenue that was already earned by the company. So your adjusting entry on December 31 is the recognition of revenue amounting to 50,000. Unearned tax consultancy fees is being credited as a liability account, and since this is credited, in order to reverse the effect, we need to put it in debit. Okay, so we debit unearned tax consultancy fees for 50,000, and then we credit the revenue portion of the unearned revenue, which was already earned by the company until December 31. So we will be using tax consultancy fees earned. For the same amount of 50,000. Okay, so let's put them in the accounts. Debit cash 150,000, credit unearned tax consultancy fees for 150,000. So we put it here, 150,000. And then the adjusting entry, debit unearned tax consultancy fees for 50,000. And then credit tax consultancy fees earned for 50,000. Okay, so if you will be asked, how much is the revenue earned in 2020? The answer is 50,000. And then, how much will be reported as unearned revenue at the end of the year? That's the remaining amount of 100,000. Okay? So, let's move on to another analysis. Some companies may do it like this. Although it's a violation of the revenue recognition principle, but some companies would do it like this. We debit cash still for the amount of 150,000. But it is automatically recorded as revenue even though the service is not yet rendered to the customers. So it's a bit of a violation of the revenue recognition principle. But some companies do it like this. So we credit it derecho on tax consultancy fees earned. So in this way, if 150,000 was the advance payment of the customers, and then 2 months lang yung na-earn, so yung unearned is 4 months. So our analysis would be reversed, okay? So we will do it like this, 150,000 multiplied by 4/6. That is the remaining unearned portion. So 150,000 times 4/6, that will give you 100,000. Because your analysis would be, this revenue account is overstated because this represents the whole 6 months. However, in reality, ang na-earn lang talaga natin is something from November 1 to December 31. 2 months lang. 4 months pa yung hindi talaga natin nabibigay na service. So, it's wrong if ilalagay na natin lahat sa revenue. So, tatanggalin mo dapat yung remaining unearned portion. Okay? So, the revenue account is being credited. So, we debit it para mabawasan. Dapat siyang mabawasan ng remaining unearned portion pa, 100,000. And then we record the remaining unearned portion on the unearned tax consultancy fees account. for the same amount of 100,000. Okay, so we post the entries. Debit cash 150,000, credit tax consultancy fees earned for 150,000. And then debit tax consultancy fees earned 100,000. And then credit unearned tax consultancy fees for 100,000. $150 versus 100 gives you 50,000. Okay, so you need to see this as well. So both of our methods, tax consultancy fees earned is 50,000. Tax consultancy fees earned is 50,000. It should just be the same. Unearned tax consultancy fees is 100,000. Unearned tax consultancy fees is 100,000. It should also be the same. Okay? Now, for the methods, since we credited it initially in a liability account, this is called the liability method. And then so in this method, since we credited it directly to revenue, this is the revenue method. Okay? So whatever method you may use, the amount of tax consultancy fees earned should be just the 2 months that was rendered to the customers, 50,000. And then how much would be reported as unearned tax consultancy fees? It would still be 100,000. Okay? So I hope you understand our lesson today. If you have questions, comments, or suggestions, you may put down in the comment section below. Next lesson will be about accruals. Thank you and have a great day.